Whether you're a seasoned investor or are just learning how to invest in stocks in Canada, there's one thing in common that almost all investors have, is that they invest in Canadian bank stocks. Every one of the banks featured in this video is a Canadian dividend aristocrat and are also included in the large majority of Canadian ETFs. Essentially, no major ETF in Canada would be complete without one of these banks included in that index. And the reason investors are drawn to these bank stocks is because they deliver on consistent dividend growth and capital appreciation. It's no secret that Canadian banks are among the strongest investments you can make in the country. Now that the economy is starting to pick back up again, Canadian bank stocks are seeing positive momentum. Just take a look at the monster dividend increases announced by the big six banks. Not to mention, these banks have been rewarding investors for over 100 years. The big six banks are incredibly important to Canada's overall economy, and they're also highly regulated, which creates massive barriers to entry. Just like Canada's telecom sector, a strong Canadian bank stock can serve as a cornerstone for one's portfolio. It's low risk, provides growth, and provides stable, recurring income. When looking at a bank as an investment, you need to do both a qualitative and a quantitative analysis. The quantitative analysis makes it easy to compare banks side by side, which I'll be doing later in the video. But the qualitative analysis is where you can really assess the quality of the bank's management team and the moves made by the CEO to deliver on growth. When looking at the basics, they all perform the same business with a similar fee and business structure. That includes big banks with international presence, as well as the regional banks. The competition is for your banking, your mortgage, your loans, and your credit cards. Investing in this list of banks that I'm about to show you is a great way to start your investing journey if you're a new investor. It also allows you to secure recurring passive revenue, especially in a day when interest rates are so low. And when interest rates go up, banks are also set for massive profits. It's a win-win situation. So do your investment portfolio a favor and pick winners from this list of the best Canadian bank stocks. The first one up is Scotia Bank. It is a leading international bank in Canada and also a leading financial institution in all of the Americas. This bank has a presence in personal, commercial, corporate, and investment banking. It also provides services in wealth management and capital markets, serving over 25 million customers worldwide. The Bank of Nova Scotia has grown its dividend every year since 2010, during which time it averaged approximately a 6% annual dividend increase. The bank first paid its dividend back in 1833. That's almost 200 years ago. And the best part, it has never missed a dividend payment since inception. You just gotta love that consistency and dedication to rewarding investors. With a rich history of over 185 years, this bank has developed an extensive network of 960 branches in Canada alone, and more than 3,600 ATM machines across Canada, plus 1,800 international branches worldwide. Scotiabank has a wide and attractive presence in global markets, such as Latin America, the Caribbean and Central America, and Asia. It operates through Canadian banking, which makes up 49% of its revenues, and the other half comes from international and global banking. Taking a look at its stats, the ticker symbol is BNS. The price is $83.92 per share, has a market cap around $102 billion, a PE ratio of 10.9, a dividend yield of 4.73, a payout ratio of 50.1, a 5-year dividend growth rate of 4.96%, and yes, it is a dividend aristocrat. Next bank stock, TD Bank. Toronto Dominion Bank is another leading Canadian bank that provides products and services to customers across Canada and in the US. It's also the 5th largest bank in North America by total assets. The bank was initially formed as a result of a merger between the Bank of Toronto and Dominion Bank. Retail earnings account for more than 90% of TD Bank's overall earnings. The bank operates through 3 business segments: Canadian retail banking, which makes up 53% of its revenues, US retail banking, which makes up 47% of its revenues, and wholesale banking. The bank offers a wide range of retail banking, small business banking, and commercial banking products and services. It serves more than 25 million customers worldwide and 13 million customers digitally. And serving more and more digital customers is becoming more and more important for future growth. Take a look at TD stats. Ticker symbol is TD. The price is roughly around $95.59, a market cap of $174 billion, a PE ratio of 12.38, a dividend yield of 3.27, a payout ratio of 37.2%, a 5-year dividend growth rate of 8.4%, and yes, it is a dividend aristocrat. Before moving on to the next pick, let's actually talk about the importance of serving digital customers. Whether you're talking about a big bank, a large public company, or even a smaller enterprise, a strong digital platform that can support digital transformation is absolute key in supporting your business and your customers. First, let's define what is digital transformation. It simply means the adoption of digital technology by a company. The common goals for its implementation are to improve efficiency, drive value, and innovation. In an e-commerce business, everything needs to be tracked to a T. Even if you're using a bookkeeping solutions like QuickBooks, FreshBooks, Xero, they do have their own limitations that you need to resolve. Because not only do you have to track everything, you also have to make sure that everything reconciles. And let's face it, you just don't have the time to do it all manually and trace every single penny. Luckily, there is a solution. And no, I'm not talking about outsourcing because that can be quite expensive. And this channel is all about financial optimization, how to make the most of your hard-earned money. An auto-updating P&L and balance sheet with all the details necessary for correct tax filing, valid data with no double entries. Cinder is a smart financial management solution for you. This will find an order and corresponding payment, example Shopify and PayPal. It will merge them and record this as one single financial transaction in the accounting system. One-click and error-free reconciliation to get ready for tax season. Asset reports with up-to-date inventory on hand across all channels. Recurring and one-time invoices as well as smart payment links to get paid in seconds. It works super smoothly with QuickBooks, Xero, Amazon, etc. I used to work as a corporate controller, and I honestly wish I had a solution like this, because not only would it have made my life easier, but also made the life easier for my entire team. A simple and smart tool to automate your sales and accounting flow? That's beautiful. Why is this important, and why am I even talking about it? Whether you own your own business or are part of a larger or smaller organization, you need to make sure your finances are organized and clean. If your data is organized and automated, you spend less time with manual processes and can instead use that time to drive value and focus to your customers. It's customers that drive a business, and a digital-first world that's even more important. Because the last thing you want is questionable books supported by manual processes. Make sure you check out the link in the description to get started, and a huge shout out to Cinder for sponsoring this video. Next up, Royal Bank. RBC is a diversified financial services company offering personal and commercial banking, wealth management, investor services, insurance services, and capital market products and services. RBC is Canada's largest bank by market capitalization. Not only that, but also ranks as one of the largest banks in the entire world by market capitalization. It serves over 16 million clients in Canada, the US, and in over 34 other countries. By geography, Canada is RBC's largest business segment, accounting for 61% of its revenues, followed by US at 23% and international by 16%. One of the unique things about RBC is that it has a large, diversified customer base, ranging from corporate to institutional to high net worth individuals. It also maintains a good balance of assets, 50% of which is in retail banking and the other half in institutional banking. Looking at the stats, the ticker symbol is RY. It's currently trading for around $120.64 per share, has a market cap of over $183 billion, a PE ratio of 11.63, a dividend yield of 3.37, a payout ratio of 40.7, a 5-year dividend growth rate of 6.3, and yes, it is a dividend aristocrat. CIBC, or Canadian Imperial Bank of Commerce, is another leading North American financial institution, and it was also formed as a result of a merger between Canadian Bank of Commerce and Imperial Bank of Canada back in 1961. The bank caters to 11 million individual, small business, corporate, commercial, and institutional clients in Canada, the US, and across the world. The bank operates through 4 strategic businesses: Canadian Personal and Small Business Banking, which accounts for 48% of its revenues, Canadian Commercial Banking and Wealth Management, which accounts for 24% of its revenues, US Commercial Banking and Wealth Management at 13%, and Capital Markets at 15%. CIBC has a strong client-focused culture, and operational efficiencies are what drive shareholder values, and also helps it grow across many different platforms. Taking a look at CIBC stats, the ticker symbol is CM, has a price around $140.10 per share, market cap of $63 billion, a PE ratio of 10.06, a dividend yield of 4.25, a payout ratio of 44.6, and a 5-year dividend growth rate of 4.44%. And yes, it's a dividend aristocrat. Next up, National Bank. With more than 150 years of experience under its belt, National Bank is one of the 6 largest commercial banks in Canada. The bank also has a leading market share in Quebec, which accounts for 58% of its revenues. The bank also has a presence in international markets like the US, Europe, and other countries. National Bank's operating units also includes personal and commercial banking, which account for 40% of its revenues, followed by financial markets at 29%, wealth management at 20%, and US specialty finance and international at 9%. National Bank also offers a wide spectrum of products and services, such as commercial and personal banking, corporate banking, investment banking, insurance, securities brokerage, wealth and retirement management as well. Taking a look at National Bank stats, the ticker symbol is NA, has a price of $96.11, a market cap of $32.5 billion, a PE ratio of 10.73, a dividend yield of 2.94%, a payout ratio of 34.6%, and a 5-year dividend growth rate of 6%. And yes, you guessed it, it's also a dividend aristocrat. Last bank up is BMO, or the Bank of Montreal. And BMO is the 8th largest bank in North America by total assets. The bank has a very strong presence across regional economies and markets around the world, and is in a very good position to address the growing cross-border needs of many corporate clients. It provides diversified financial services and products across personal and commercial banking, wealth management, and investment banking. It serves a wide range of customers, including over 12 million individual, businesses, and government clients across Canada and the US. By geography, Canada is the largest market for BMO, accounting for 60% of its revenues. The US makes up 28% of its revenues, and other countries like Europe, Asia, the Middle East, etc. make up 9% of its revenues. Looking at the stats, the ticker symbol is BMO, price of $137.98 per share, a market cap of $89.4 billion, a PE ratio of 11.92, a dividend yield of 3.15, a payout ratio of 39.5, and a 5-year dividend growth rate of 10.43. And yes, it's also a dividend aristocrat. When looking at all these 6 different banks, you'll notice that they're also very same, but also very different in nature. For example, TD Bank focuses more on the retail side of its clients. Meanwhile, banks like RBC have a balance between retail banking and institutional banking. And the Bank of Nova Scotia focuses more on international banking, while National Bank has a very heavy presence in the province of Quebec. Now that you're looking at the banks and their stats side by side, which one should you invest in? If you're looking at strictly pricing, it ranges from $84 per share with Scotiabank and over $140 for CIBC. That means it does require a significant investment if you want to own a few shares of any of these banks. But you can't make your investment decision based on just stock price alone. Now, if you want to own the largest of the large banks, then RBC is your choice with a market capitalization of over $183 billion. It's also Canada's second most valuable company, right behind Shopify. Or maybe you want to own the top 2 largest in the group. In that case, your choice would be RBC and TD, which has a market cap of over $174 billion. Now, if you're looking for the biggest yield, your choice would then come down to either Scotiabank or CIBC, both of which have yields north of 4%. But they also have the highest payout ratios in the group, something to keep in mind, which means less funds are retained by these 2 banks to grow and expand operations. So there is a bit of a trade-off between high yield, payout ratios, and growth. Now, if you're looking for the maximum dividend growth rates, then your choice would be BMO at number 1 and TD at number 2, both of which have strong dividend growth rates between 8 to 10%. Or if you like all 6, you can buy shares in all of them, and there's nothing wrong with that either. It all comes down to personal finance and what you're looking for as the investor. Are you looking for income, growth, or a combination of the 2? I hope you found this breakdown helpful when deciding what banks to invest in as part of your portfolio. Remember, deciding what not to invest in is just as important as deciding what to invest in. Canadian bank stocks are considered to be safe, dividend-friendly, and best for long-term holding. With that in mind, choose a superstar bank for your portfolio and your needs as the investor. And make sure to check out the links in the description on how you can track these banks using my custom-built dividend tracking spreadsheet. Thank you so much for watching. I'll talk to you in the comments section.